Welcome to Thoughts on Investing. Today, we are examining Applied Optoelectronics Inc., a vertically integrated manufacturer positioned directly inside the global AI infrastructure buildout. Over the trailing 12 months, this stock has appreciated more than 1,140%. The run is backed by tangible engineering milestones in optical networking, yet the current valuation has severely outpaced the company's foundational financial metrics. This is not financial advice. Investing involves risk, and you may lose money. Do your own research before making any financial decisions. To accurately model the risk-reward profile of this setup, we have to evaluate both the physical hardware requirements of a modern hyperscale data center and the quantitative signals embedded in a heavily extended price chart. The primary constraint in training large AI models is connectivity. When tens of thousands of GPUs operate simultaneously, data exchange rates overwhelm the physical limitations of copper wiring, degrading signals and generating excess heat. Applied Optoelectronics addresses this physical bottleneck using Linear Pluggable Optics, or LPO. These optical transceivers convert electrical signals into light pulses, allowing data to travel over fiber with minimal power loss. Traditional transceiver models rely on a digital signal processor to manage data flow. The LPO architecture strips this processor out entirely. Eliminating that single component cuts power consumption by 50% while reducing latency, two critical requirements for AI training clusters. Unlike competitors who act primarily as assemblers, AAOI controls its entire supply chain. They grow their own indium phosphide laser substrates, manufacture the laser chips, and assemble the final modules. Because 35% of their 800G transceiver capacity is located in Texas, they offer an immediate domestic supply chain solution for U.S. hyperscalers looking to mitigate geopolitical risk. That domestic manufacturing edge has already materialized into hard revenue. In early 2026, AAOI secured over $300 million in combined orders for their transceivers. This chart shows the company's revenue trajectory. Following $455.7 million in 2025, management forecasts a jump to over $1 billion for the 2026 fiscal year. The shift toward linear pluggable optics is a physical requirement for next-generation data centers. The technology provides a verifiable baseline for the company's rapid capacity expansion. We must now examine how large market participants are pricing these exact hardware deployments. This is the monthly chart for AAOI. The stock is currently trading at all-time highs near $150.60. The velocity of this move is extreme, climbing 282% in just the first few months of 2026. Price has broken decisively above the 200-month moving average, which is now turning upward as support. This breakout is confirmed by the 55-month average in blue. Below, the volume profile has surged to levels never before seen in the stock's history. Volume bars of this specific magnitude verify that this rally is driven by sustained institutional accumulation. The chart verifies that institutions are aggressively buying the hardware thesis. However, the rapidly expanding gap between the current share price and its historical averages introduces severe volatility. To determine if this expansion is nearing exhaustion, we evaluate the underlying momentum oscillators. The V-orbit indicator is registering its highest composite readings on record, with the fast line at 45.28 riding cleanly above the slow line. Below that, the V-Pendulum histogram tracks the underlying strength of the momentum thrust. While the reading is strictly positive, the histogram bars are beginning to visually flatten at the peak, suggesting early signs of momentum exhaustion following the extended run. The structure of the price action itself reflects this overextension. We can see this directly in the most recent monthly candlestick. This specific vertical shape is a parabolic expansion candle. It indicates the asset is trading entirely unanchored from prior resistance levels, in a state of pure price discovery. Because the ascent was vertical, no structural support zones were built on the way up. In the event of a retracement, the first major technical floor does not appear until the prior breakout level near $100. Momentum is heavily bullish, but vertical expansions carry intense structural risk. Historically, charts matching this exact profile will very frequently experience sharp, rapid corrections before eventually establishing a healthy, sustainable trading range. The chart implies operational perfection, yet the company's financial reality tells a different story. For the full year 2025, they posted a GAAP net loss of $38.2 million, and they have not yet reported a single profitable quarter. Buyers at $150 are paying 25.6 times trailing sales, leaving zero margin for error. Corporate insiders recognize this premium. Throughout the 2026 rally, internal executives have been consistent net sellers of the stock. Wall Street analysts remain heavily skeptical, maintaining a consensus target of $90.30, implying a 40% downside risk. Their projected growth relies heavily on one or two key hyperscale customers. The entire revenue pipeline is bottlenecked through these highly localized contracts. To hit their $1 billion target, they must simultaneously scale their 800G production to over 100,000 units per month, while perfectly executing the commercial launch of their new 1.6T lines. Scaling physical manufacturing to this degree is inherently difficult. If a single high-volume order is delayed or a capacity constraint emerges, the intense friction between their actual earnings reality and their extremely parabolic share price will inevitably force a very severe market correction. Applied Optoelectronics possesses a confirmed technological edge. Their LPO architecture solves a physical limit in AI data centers, and they have over $300 million in signed orders to prove the demand is real. But that advantage is currently priced at an extreme premium. The asset is completely unprofitable, faces consistent insider selling, and is trading at the absolute tip of a vertical expansion candle. When compared to larger, diversified players in the optical space, like Coherent or Lumentum, AAOI offers the highest beta exposure to the hyperscale thesis. It will move faster and harder in both directions. Approaching an asset in this condition requires precise mechanics, strict entry discipline, calculated position sizing, and hard stop-loss levels are strictly mandatory. The underlying hardware thesis is highly credible, but the current chart profile dictates treating this as a high-risk momentum trade rather than a stable value investment. If you enjoyed the video, please don't forget to like and subscribe to the channel.